Good evening, everybody. Sorry for the delay. Our normal problems with Omnovia. Tonight we got the great pleasure of having Kirt Christensen with us. And he is a great teacher as far as trading the ETFs. So I'm not going to take any more time since we're running behind schedule. Kirt, good to have you back again. We're anxious to see your information tonight.
Hey, fantastic. Hey, thanks for having me on, Steve. And it's always good to talk to your people. I know you have such an awesome audience and awesome customers and prospects, so it's good to be here. So today we're going to talk about how I discovered a simple high win rate ETF system that consistently delivers big time returns with lots of compounding without being chained to your computer. So if you're one of those guys or gals that wants to sit in front of your computer for 10 hours a day, this presentation probably isn't for you. But, if you're anything like me, this is a kind of a pretty cool insight into the world of trading, possibly slightly different than the way you trade now. But this is something you can always add on to your trading repertoire and have pretty fantastic results. We're going to show you some of that. We're going to show you kind of what I think about trading, what I'm interested in. I'm very interested in systematic and algorithmic trading, and so that's what we're going to show you tonight. One of the algorithmic trading systems that I came up with, the results, how you can participate if you want. If you don't, of course, the information is there to hopefully inspire you to do the same thing in your own trading. So, of course, before we get started, the usual legal stuff our attorneys make us say: financial markets are risky, investing is risky, past performance does not guarantee future performance, and all that. We're all adults here. So let's get down to the nuts and bolts right off. Today is the 28th day of February 2019, correct? Well, as you see on the screen, that's our results with our current open trades as of today. So we only trade 9 different sectors of the economy, and we'll explain all this as we go a little bit more, of course. But we trade 9 different sectors of the economy, and you can see the current results of those right now. Those current results are, we're in the DIA, the SPY, the Qs, the KBE, which is the Banking and Finance Index, the OIH, which is our oil proxy, GLD for gold, SMH for semiconductors, IYR for real estate, and XLB for materials. And just as luck would have it, and systems would have it, and expectancy and all that kind of good stuff, we're currently up on all of those trades. We're bullish on everything, which is actually kind of rare, because usually when you're bullish on the rest of the market, you're going to be bearish on gold, and the inverse of that, of course. But for whatever reason, according to the algo and the system that we developed, and we're going to detail exactly what that covers, we're bearish on everything up, and we're currently up on all of these trades right now. So why should you listen to me? Frankly, my investing goals are pretty simple. I want to get way above market returns. I want it to be mechanical and emotionless. I want lots of compounding, and I want it less than 15 minutes a week. And yeah, you can do very well in this market and still make typos. So I just changed that extra 2 to a 3. That's what I'm all about. So who's with me? Who is interested in those same type of investing goals? Where's everyone at? What kind of trading do you do now? What kind of investing do you do? What's the gamut? I understand that you're going to have everything from people who are investing in a small IRA or retirement account, all the way up to people who have all kinds of discretionary funds, and they've got funds in one place doing one thing and funds in another place doing another thing. If you can go ahead and type in the chat box, what kind of trading are you most interested in, most excited about right now? Day trading, swing trading, position trading, options, futures, Forex, stock/ETF. Okay, we got most people are saying, we got a couple guys saying swing, futures, IRA, swing, directional options, did swing, options trading right now, day trade, swing and options. Yeah, so a lot of swing traders, which is great. That's kind of what we're going to be talking about tonight is another version, my take on swing trading. So before we get to that, and I'll explain exactly how we're trading, how we're getting those results. What a trading system is to me is when to enter, and really that's the crazy one that we even put that number 1, because it shouldn't be number 1. There's a lot of things that are way more important than when to enter. But that's the $64,000 question when you talk to somebody about trading. Well, when did you buy? So when to enter is important. of course, but just as important, probably more important, is when to exit. Number 3 is how much volatility exists in that market, as in how much can it change. If you have, is a 1% move totally normal, or is that something that only happens, in over the course of hours or days? Trade size versus available capital. That is huge. I talk to so many people who overtrade, and that causes all kinds of problems. Even if you're winning, overtrading causes problems. And then, of course, how much to risk? The famous 1R. What's the amount you're willing to lose on any particular trade? So my opinion is you should only trade objective, quantifiable, emotionless systems. Now, this business is going to tear you up emotionally enough as it is. Don't make it even more difficult by trading something that's subjective. You want something that's objective, quantifiable, and emotionless. So here's some proof or evidence that what I'm talking about. I'm not some Johnny-come-lately idea. Frankly, I've been selling this exact same signal service / algorithm / ETF tipping point since 2012. So, frankly, I've been doing this a long time. 6 years in delivering live results to customers, and then years prior to that, even as we developed the algorithm going back to 2006, when we just kind of used it for ourselves and for some private clients. But we've delivered over 624 real-time trades since 2007. So we're going to show you some of those recent closed trades, just in passing, just so you can see, hey, this is what we're talking about. This is kind of the scope. And to put this in perspective, we don't show this to impress you. We just show you this to show you the possibilities, to keep an open mind. And one of the biggest benefits that you can have in trading is seeing what other people are doing. Not necessarily so you have to do exactly what they're doing, but so you can take what they're doing and model it and apply it to whatever your current strategy is, or add on top, of course. So if we took $10,000 and gone back into time, back to 2006 when we started releasing these signals to the public, we've released these in real time since 2006. And if we would have placed $10,000 into just the Dow trades, this is with the single ETFs, not even talking about double ETFs, which we'll get to in a minute, and options and all that kind of good stuff. But that $10,000 with compounding would have turned into nearly $425,000. By compounding, I mean we started out with $10,000. If the trade goes up 1%, right, obviously we got $10,000 plus 1%, so we got, $10,100, and we invest that in the next trade, and if that trade goes up 3% or down 2%, it's all in a silo, and we're investing it in that particular ETF as those trades go up and down. So, but even without compounding, that would have turned into nearly $50,000. So even still in 13 years to 5x your money without even compounding. And here's some of the recent trades that we've taken on the Dow Jones. You can kind of see what kind of swing trades we're talking about, 30, 40, 60-day type of time frame. On the Dow, using this algorithm, which I'm going to explain exactly what it is tonight. I'm not going to hold anything back. The only thing that's separating you and what we've been doing for the last 13 years is, the computing processing power and the programming brain power behind it. But we got a 97% win rate. So the concept that we're talking about tonight absolutely works. S&P 500, $10,000 into almost $450,000. NASDAQ, $10,000 into over $1 million. NASDAQ has a 97% win rate as well. Banking, $10,000 into about $3.5 million. Oil, $10,000 into nearly $12 million. But oil of all the sectors is my favorite sector, bar none. We just recently got out of a trade, and I can show it to you here on the screen if we have time. We just recently got out of an oil trade that was a 45% gain in about 5 months. Now, granted, if you're used to dealing with options or futures or things like that, let's put those numbers in perspective. That's with a single ETF, and so just imagine what you could do if you traded the 2x ETF, the 2x ETFs on that, or options of some sort. Gold, we turned $10,000 into almost $470,000. Semiconductors into $10,000, almost $3.2 million. And real estate, which I think is a boring ETF, 10,000 into over $1 million. XLB, which is probably the least known sector or ETF that we could talking about. But currently, we're up, I think, 40% since October in one of our model portfolios using the materials ETF. Because in the case study, it turned $10,000 into almost 1.8 million. So, anyway, all that said, overall, if we would have placed, we didn't do it. Obviously, we're talking about these trades were generated in real time, but we didn't place the when I started, I didn't have $90,000 to place into each of these ETFs. Obviously, the beginning of my trading career, those $90,000 would have turned into nearly $24.5 million with compounding, which is a 27,000x return on capital in those 13 years. Or even without compounding, we just take all the profits off the table. That $90,000 would have turned into nearly $600,000. So what does that mean for me? What do I have to do when I consider designing a trading system? Where do these trades come from? Okay, Kurt, let's talk about how are you coming up with these trade ideas? And well, not ideas, are these trade signals. Well, frankly, to me, technical analysis is 50 years of traders arguing about stuff that works sometimes. If you go to Amazon and type in technical analysis, you can get over 50,000 books related to just the subject of technical analysis. So my controversial statement is going to be that moving averages suck. Because, technical analysis by itself doesn't do it. Let's face it, we really only have three basic elements to work with, and everyone is looking at exactly the same data. We have price, we have time, and we have volume. And of those three, if you think about what indicators are based on, they have to be based on one of those three things. Which two factors are the most used when it comes to indicators, and which is kind of the one that's left out in the cold? Anybody have any guesses? Out of price, time, or volume, which is the one that gets left out in the cold when we're talking about indicators and research and interest and all sorts of things? Volume, Bill says. Okay, yeah. I mean, it's only those three: price, time, and volume. Volume is the thing that gets left out. This the discussion that gets missed. If we go to Investopedia and we type in technical indicators, I mean, there's no shortage even of technical indicators. I mean, the page goes on and on from A to Z. I think there's over 2,000 different types of indicators. Just on this screen, you can see, you got the absolute breadth index, you got the Andrews pitchfork, you got the autoregressive, you got the Arun oscillator, right? And it just goes on and on. Because everyone scrambles to put their name on a proprietary indicator that attempts to manipulate one of those three core elements or combinations of those three core elements in a slightly unique way to produce a slightly different result from the next guy. So the basic failure, in my opinion, of all those systems is pretty simple. They all use moving averages. You're going to see standard deviations using averages, calling them Bollinger Bands, MACD, stochastics, Wilder's parabolics, all the rest. But, even a brand new trader to moving averages knows that they're a gotcha. If you're too short on your moving average, you get whipsawed. And if you're too long, you get left in the dust. So even for the past 15 years, I've avoided moving averages like the plague just for that reason. Sure, I still look at stochastics, but I try to look for areas that are not being monitored by other folks because for me, that's what makes all the difference. I don't want to run with the pack because the pack is invariably wrong. So what do you do, Kurt? You've talked about, okay, here's the results of the trading algorithm. What you don't do, what does it do? Well, let's go back to 1963. Now, some of you on the call were around in 1963. Others, like myself, I wasn't even born in 1963. But in 1963, an infamous gentleman in the trading circle, I'm just going to leave it at that, Joe Granville came out with his book, New Key to Stock Market Profits. And in it, he revealed what he called on-balance volume, which was a very simplistic, very simple to calculate theory, which, like most of them are, moving averages aren't hard to calculate. Obviously, they make them a little bit more, spice them up with exponential moving averages and all that kind of stuff. But in 1963, he came out with his book, On Balance, and it talked about on-balance volume. And his claim was that volume precedes price. And if you write no other three words down tonight, write this down. Volume precedes price. A major change in price, either up or down, is preceded by a major change in volume. And, well, how did he calculate this? His calculation, the very simplistic calculation. Now, remember, we're talking 1963. So this is pre-calculated. This is all slide rule and, those green accounting pads and probably They probably had those, accounting electric calculators back then, right? Printed out on the tape and stuff like that. But OBV is a simple indicator that adds a period's volume when it closes up and subtracts the period's volume when it closes down. So a cumulative total of the volume additions and subtractions forms the OBV line. So that line can then be compared with the price chart of the underlying security to look for divergences or confirmation. So OBV came out in 1963. So can you think of any improvements or changes or updates to computing power that have happened since 1963? So 1963 to now, 2019. So we're talking 60, let's see, how many years is that? 56 years? Something like that, right? Well, here's the cutting edge video game that came out in 1963. It was called Space War. It was kind of like a 1960s version of Asteroids. Asteroids came out in about 80, 81, something like that. But this was Space War, and this was the computer that it ran on. You notice they had circular monitors back then, which is kind of interesting. And it was just two spaceships. One, looked like a pencil. The other one looked kind of like a wedge. And they fired torpedoes at each other. That's in 1963. That is the cutting edge of computing power in 1963. Well, let's look at 2019. This is a screenshot from a recent game called Assassin's Creed. It's not like I'm into video games or anything like that. I just wanted a visual representation to show you. Well, do you think the computing processing power behind rendering something like that on a computer screen is slightly more powerful than what happened in 1963? Well, of course. So here's what we do. OBV was the indicator that came out in 1963, and Joe Granville had a lot of success with that, even calculating it by hand at the end of the market day. So what we do that's different is we look at every single stock transaction individually that makes up a basket of the ETF. So, for the S&P 500, we keep a running total throughout the day as to whether there's more buying pressure or selling pressure on every single trade, tick by tick. So the question may be, well, how do you do that? So I pose that question to you. How do we do that? How are we able to ferret out with the information that we're given whether there's more buying pressure or selling pressure on every single individual stock transaction? We're not talking about an insignificant amount of transactions here. We're talking about, for example, the 500 companies that make up the S&P 500. How do we do that? Anybody have any ideas? No ideas yet. Nobody's posted anything, so I'll go ahead and tell you. Well, this is, if you go to Wikipedia and look up the list of the 500 S&P 500 companies, we're talking about major companies. And this was a video, so it doesn't exactly render the same. But suffice it to say, to get to that question, how do we know whether there's more buying and selling pressure going on a single transaction? We take a look at the bid-ask spread. So the bid is the price a buyer is willing to pay per stock. The ask is the price the seller is willing to sell their shares at, right? The bid price, here's what I offer you. Offer versus ask. Sometimes bid is called offer. The ask price is the seller is willing to sell their shares at. So the bid-ask spread is the difference between the highest ask and the highest bid. And the difference between those is the bid-ask spread. So what we do is we evaluate the bid price and the ask price of each individual trade. And if the sale went off closer to the ask price, then the sellers were willing to hold out for a higher price, and the buyers were willing to pay a little bit extra to ensure that they got those shares. But if the sale goes off at the bid price or closer to the bid price, then it was the sellers who were willing to move their prices down toward the buyers who were in control, able to force the hand of the sellers to reduce their price. So that establishes whether there's a positive or negative volume throughout the day, which, like Granville's original idea on OBV, it allows us to set up with a greater confidence, a more precise measure of where the real power is all day long, with the buyers or with the sellers. Now, at the end of the day, we can look at a losing day, but we know from the on-balance volume whether it's actually really whether there is bullish or bearish move for the majority of the stock. At that point, we simply do a cumulative summation for the next 13 sessions. At the end of that, we have a pretty good idea of which stocks are advancing on hidden power or some that are failing despite the prices continuing to go up. Okay, so another way, an analogy way to put this is, it's kind of like when you look at a river. If you go to the Mississippi River, the river is 2 miles wide, and at points when you're looking at it, it can appear that it's not even moving, right? Because it's so wide and so vast, and there's so much volume. Remember that key word, volume. But even though, the river on the surface doesn't appear to be moving, because of the volume, because of the depth and the width we're talking a tremendous force, a tremendous push, and tremendous impetus. And conversely, you can look at a small, quickly or fast-running stream that's only an inch deep, and the water's moving like gangbusters, but the volume of that really isn't doing anything. And that's just kind of a quick metaphor, kind of establishes what we're talking about volume here. So you notice that all of this is done without the use of a moving average or any commonly available indicator. So we've been collecting this information over the prior 13 trading days. We know where each of the ETFs sits in terms of positive or negative trend. And when it switches from positive to negative, in what we call our ETF tipping point, then we have a sell signal for that ETF and vice versa. So, let's walk through the whole process. I'll show you exactly how it works. At this point, I'm going to assume that you have decided to forego the development of your own tick-by-tick collection platform, and you're going to use our signals if you choose to. If not, feel free. It did take us several years to get this right. I do have ongoing data costs of over $1,000 a month, and well over $175,000 in programming fees over the years, of course, to get this established. So what we do is we send out these signals notifications after 12:30 p.m. Pacific, 3:30 p.m. Eastern on Fridays. The system only makes changes once a week, if a change is made. Not necessarily a change happens every Friday, but if a change does happen, it happens on Friday. Occasionally, when we have periods of high volatility or high movement, there'll be so many transactions that the computer is spitting through. The algorithm doesn't print out our answer until after the market closes. And so in that case, we simply place those trades for market open on Monday. So, of course, we haven't even mentioned the different ways you can trade this. Of course, you can buy or short the 1X ETF, or you can buy the 2X ETF, or the 2X inverse ETF, or you can buy calls or puts on the 1X ETF, or buy calls or puts on the 2X ETF. So when we're taking a look at this chart, for example, you can see our current time in trade. Our oldest trade, longest trade, is the gold trade, goes back to 10.8. It's 104 days long, and we're currently on the single ETF of 10.19%. Now, the shortest trades we have this, a couple trades that are 24 days long, and they're up 5.89% for the DIA, 5.82% for the SPY, 5% for the KBE, 2% for oil, and 3.69% for real estate. So, of course, we're not talking about day trading figures here, but we are talking about swing trades of 30, 40, 60 days in length on the largest ETFs known to man. We're talking about the SPY and the DIA. Now, all those results we're talking about are based on the single ETF. Of course, we also show you how you can trade if you choose to trade the double ETFs. So, for example, on the DIA, we give you the list of both of the 2X bullish ETF and the 2X bearish ETF. 2X bullish is DDM, so that would probably be up some multiple of about 2 of the current results. Obviously, some ETFs are better than others. Not all ETFs are created equal. And so the bigger, higher volume ETFs, like the DDM, the DXD, the SSO, the SDS, ones at the top of the list, are going to have a better tracking, more, they'll do what they say on the label better than some of the others. So that's kind of what we're talking about here. Okay, so then we hold those positions to reverse, rarely go to cash, re-enter the trade the next week. Now, that's not to even mention, you'll notice there's the last 2 columns on the right, we have options available. Now, what we do is we choose options that become a mini version of the ETF. So we're typically buying options when we initiate the trade that are 4 to 6 months out and have a delta of about 70 to 75. And so what happens if the trade goes in our favor, a couple percentage points, what happens to the delta of the option if the trade goes in our favor? Well, the delta of the option rises. If we've been in the trade a long period of time, it's not uncommon for the delta to go to 85, 90, 95. Occasionally when we're in a trade and it super goes in our favor, multiple strikes, obviously, you can have an option that goes to the delta of 1 or 100, depending on how your system calculates it. Mine calculates it from 0 to 100. So when I say a delta of 100, on some systems it'll show 1.0, and the rest of the time it'll show 0.75 or whatever. So what do we know about an option that the delta goes extremely high? Let's say the delta goes to 90. What do we know about that option? What happens to the price of that option, the value of that option, if the DIA goes one more dollar in our favor. What do we know by definition? Well, by definition, we know the value of that option is going to go up 90 cents. That's what delta means. So here's the great thing. When we initially bought that option, we were buying that option a little bit on the speculative side. However, after the option goes into our favor, all of a sudden we have exactly the same performance or nearly the same performance as the underlying ETF with a fraction of the cost, right? So we don't have to put up all the money to control 100 shares of the DIA. We can buy one contract, call or put of the DIA, and if the market goes in our favor, the trade is profitable, it turns into a mini version of the ETF, which is pretty dang cool. Okay. So our ETF is either bullish or bearish in our system. We try to be in the market at all times. If you're only comfortable playing to the upside, then only trade when bullish and go to cash for that ETF when bearish. So every Friday around 12:30 p.m. Pacific, that's when we send out email alerts to our subscribers, status where we believe the signals will be by the end of the trading day, done by posting on our membership site and by email. And then really the whole key to this is do it again a couple hundred more times. No one or even a dozen of these trades is any particularly exciting, right? However, what is exciting is when you get compounding on your side. And of course, we've done this 624 times in the past 12 years for an average of about 5.2 trades per month. So hidden secret for you, find a system that has a positive expectation. So a positive expectation means it makes money in the long run. On average, it makes money. We're not talking about any particular trade. Any particular trade can be a winner or a loser. We're talking about, to give you a basketball analogy, we're talking about a guy who's the NBA leader in free throw percentage, and over his career, over 15 years, he shoots 90% from the line, right? That does not mean when he goes to the line in any particular case that he's, guaranteed to make a shot at all. It just means he most likely has a 90% chance of making that shot. You win some, you lose some, but that's a guy that I'm going to want shooting free throws, game in and game out. I'm going to give him as many shots as we can because we know, some games he's going to go 10 for 10, other games he's going to go 9 for 10, sometimes he's going to go for 7 for 10 or 8 for 10, right? But over time, his results are going to approximate his career average, right? And then the real secret is we compound the heck out of the system. So that's what we do. Here's exactly where we're at as of the close of business today. So if you want to kind of keep an eye on a couple of these, right? I mean, some of them are we're bullish on the DIA, SPY, Qs, KB. Take a look at oil. We're bullish on oil. We just switched into a bullish position in oil in 128 after making about 45% on the drop off of oil. We went bearish on 10-8 of last year. So if you look at what happened that week, we went bearish on a Monday call, and then Wednesday is when the market started tanking off, right? So, of course, my life goal, start with the end in mind. I never let my money pursuits take precedence. I'm from a small dairy farming town in Preston, Idaho. Nobody special. I don't want to be chained to a desk. My biggest things in life are hanging out with my family and doing things that bring financial freedom and, exploring the world, all over from Guatemala and Costa Rica and Peru and Africa and you name it. I'm no newbie to this. I've been asked to invite to speak at investing seminars all over the world. This is this past September in London, UK, the Financial Marketing Summit. And of course, being me, I took my time, and after going to London, we didn't immediately go back and get back to work. We toured Eastern Europe for a couple of weeks. So this is in Budapest, Hungary. My wife in Vienna, and it just goes on and on. So that's what I'm all about. I'm all about creating automated, sustainable, automatic systems. And so who might be interested? Where can I give you kind of a pitch of exactly what we're talking about for a few minutes? And then we have some time to answer some questions. I've got some frequently asked questions, and then we'll wrap up. So to put it pretty simply, I've got an offer to coach 25 of you. It's pretty simple. You can either pay $997 for 6 months access or $2,997 for 3 years access. That's a 50% discount. If you do go with the 3 years access, of course, we are going to give you some additional bonuses. One being my advanced option workshop that we sell for $5,000. We get copies of that on DVD and online video included. You'll get my weekly option science program, which we sell day in and day out for $500. You'll get that as well, and you'll get workshop tickets to my upcoming virtual workshop that we hold every spring. So I hate overhead. I could get fancy marketing guys, hire some full-time sales guys, but that's just not me. I mean, if you're ever in the neighborhood, there's me in the office, trading signs, 2426 South Richmond Micah Road, Spokane Valley, Washington. We've been around. We're going to be around. We're not a fly-by-night type of organization. We're here. We've got customer support. We answer the phone. Better Business Bureau we've been on their list for 15 years. We have an A+ rating with 0 complaints. Disneyland, for example, has an F rating with Better Business Bureau. I'm just saying, we don't get complaints. We treat people right. Another thing that we do since last year, we keep track and we place real money trades with $10,000 into each sector, and we post those brokerage statements on the actual membership account. So I know if you've been around trading any period of time, there's a lot of great systems out there. We kind of put everything in. The proof is in the pudding. We show you the actual transactions of the trades. And so this current model portfolio is up about $17,000 or $18,000 since October when we did this last round, and we published all those brokerage statements, from my TD Ameritrade account. So what we're going to do is we offer this with a Iron-Clad 2-part guarantee. Part 1, go through the entire training. It's going to take a couple hours to go through it, go through the membership site, see our model portfolio, ask any questions you have, start trading live or in demo mode. And if you don't love it, get a complete refund anytime within 90 days of order. Simply submit your trading log and we'll issue a prompt refund. Or part 2, learn the system, use it for a full 6 months, execute all the trades as they come up. If you don't at least make back your system investment, $997 for your 6-month option, in profit, I'll personally work with you for free until you do. So I really don't think you can be, either you love it, make good money with it, or you hate it and you get your money back. I don't think we can be much more fair than that. So we are going to give some couple bonuses the first 25 signups, and we'll get to the frequently asked questions and take any questions from people who aren't here live. So there's some bonuses for the first 25 signups if you either purchase the $1,000 option or the $3,000 option. We're going to give you a free 5-night vacation hotel stay in Mexico, Cancun, Puerto Penasco, Mazatlan, Acapulco, Puerto Vallarta, Thailand or Spain, or a 3-night stay in Vegas, Branson, Williamsburg. So those you pay resort fee and taxes. It's not a timeshare pitch. And we're going to give you a 2-day virtual workshop, spring of 2019. That's a $2,000 value. Attend from your own home, free through your computer. We do a 2-day virtual workshop where we cover everything in depth, advanced training on all of my systems. And you automatically get that as part of it. You also get monthly live customer support webinars. We do those on the 4th Monday of every month. We recap our exact current positions, take any questions, and we stay on as long as anybody has questions. So to make it simple, there's going to be some I thought I had some order links, but the order links are going to go out in the email goes out afterwards. So if you want to call to place an order, you can do that. We take orders over our secure voicemail line, 509-720-7867. Leave a detailed message with your full name, address, phone, email, and credit card, along with your choice of which of the 2 packages you like. Return your call ASAP, confirm and processing the orders. Or you can order online, etftippingpoint.com/6month or etftippingpoint.com/3year. Okay, so that said, that was the commercial portion of tonight's webinar. And we'd love to have you on board. We have hundreds of profitable customers. We've been doing this a long time. We've got tons of happy customers that renew and renew and renew. Every month we have, I can't even count how many customers that pay us an extra several $1,000s to renew their subscription. So let's go into frequently asked questions and take any questions you have as we come up live. Okay, yeah, so Becky just put the links on there for the Bigelow people, ETF Tipping Point -6-month and the 3-year access. We're both on there. So as the questions come out, I'm going to have to scroll back a little bit and answer some of those. So why don't I'm going to leave the FAQ here on the page, so that'll kind of tell you some of the questions that we're going to answer, and then I'm going to go answer questions from people who are here live. Okay. Sid or SD calls us said, what are your drawdowns like? The max drawdown that we've had, I believe, in any of the sectors was, we have all this. So drawdown on Dow was 8.7. The buy and hold was 7.2. On S&P was 5.2. NASDAQ 9.4. Banking was 14.9. Oil was 17%. Gold was 5%. And most of these are lower than the buy and hold drawdown. If you would just bought and just held it. 10% on semiconductors. Real estate's 5%. And materials was 9%. And all those charts, the complete trade history, the current trade graph, all of those are in the membership area as soon as you join. Of course, like we talked about, look, we just want you to claim one of your spots, one of the 25 spots. We do have a very, very generous and easy to understand guarantee. Part one, hey, go through the trading live, make the trades in either live mode with real money or in demo mode. Demo mode is fake money, by the way. You don't have to risk a dime. You do have to make the trades. We do want you to make the trades in a timely fashion. If you don't love it, get a complete refund anytime within 90 days. Just show us the trades that you executed, either live or in demo mode. Okay. Learn the system. Use it for full 6 months. If you don't at least make back your system investment in profit, I'll personally work with you for free until you do. Like we talked about, let's see, we had the FAQ questions, and then let me go through here. Okay. Why not have a monthly situation? Because we're just looking for committed people that are willing to try it out for at least 6 months. This isn't one that comes up where you're going to immediately make the trades. We don't have trades generated just to have trades generated, and we can't predict when it's going to happen. So sometimes we get new members, and it takes a little while for them to get into the system, get their funds invested. Katie asks, what's the business name on Better Business Bureau? Scientific Marketing is our main LLC. Kirt Christensen is my name. Let's see. So we got everything on there. I'm going to go through the frequently asked questions, and I think we're about out of time. We're about 45 minutes past the hour right now. Okay. So what about Brexit, the flash crash of 2010, recession 2008? What kind of experience do I need? Can I trade in an IRA or 401k? How much startup capital is needed? Why aren't you retired on a tropical island somewhere? This is my personal favorite. I should really change this and make this one the first one. But why are you selling the system to us? Another great question. And how many versions has the system gone through? Okay, so we'll cover a few of those until we're out of time, and then we'll call it good. All right. So when we have anomalous events like Brexit, you would call black swan events in today's nomenclature, based on the famous book called The Black Swan. What about Brexit, flash crash of 2010, recession of 2008? Every time that one of those elements have happened, including the crash of 2008, we have been already on the correct side of the market before it happened. So if you look at what happened to the SPY in June of 2008, we were already short on the SPY. We were short on the SPY from June until December. We made 56% just on that single trade. Flash crash, May 6, 2010, some of you may remember that. We were short that day when the market tailed off. Now, it didn't really end up being crazy or anything like that, but if it had been, we were already well positioned because we were already short that day. Brexit, same thing. Turned out to be basically a non-event back in June of 2016, but we were short if the markets had tanked on that day. What kind of experience? Well, you really just need a desire to learn. I mean, if you're here, if you're a customer of Steve Bigelow, you already know 99.9% of what you need to know to trade my system, because we have an ETF weekly swing trading system that's pretty plug and play. Obviously, you need to make your own decisions on single ETF, double ETF, or options and all that kind of stuff, but we can support you with that as well. Can you trade an IRA or 401k? Absolutely. The only drawbacks is you can't trade short positions in IRA or 401k. So to get around that, of course, you can trade the XX ETFs, and or you can just go to cash in those accounts. There is also a list that we can give you of 1X inverse ETFs, so you would never have to short. How much startup capital? Well, we recommend at least $500 per sector, or $4,500 to trade all 9. With less capital than that, you just trade fewer sectors to build up the account. And the big question, why aren't you retired on a tropical island somewhere? Why are you selling the system to us? Well, frankly, even if I had 1,000 active students, and they all had $100,000 invested in the SPY, for example, that would be 469,000 shares. That would only be one half of 1% of the total shares traded. And we're nowhere even close to that. These are not markets that we can influence. These are not markets that we're going to push around or cause slippage and things like that. And frankly, is there any faster way for me to grow my own trading account than to make frequent deposits to further the compound? You know, from one day to the next, for example, if we have 25 new members come on today and they all purchase the $997 package, I'd have $26 in additional capital put in my trading accounts. Why wouldn't I? So that's my answer to that. How many versions has the system gone through? We're currently on version 4. Do we offer money back guarantee? We already covered that. We already covered the current results, exactly where we're at, and we already talked about here's how you order. Ordering things are on the screen as well. You can also call the secure voicemail line, 509-720-7867. And we don't have time to go through the testimonials of proof, but you know we have plenty of that out the yazoo. Let's go ahead and answer any other questions that we've got. And I think we're about out of time. I think we're supposed to be done in 45 minutes. I think we're right there. RP asks, how many trades per week, per month? We average about 5.2 trades per month. And for each rotation, do you buy all 9 sectors? No, each sector operates independently, so some of them may make more trades than others. Some of them more profitable than others. My personal favorite is the oil sector. You know, we just have trade after trade where we get a 30% and then a 40% winner and then, you know, a 10% winner, that kind of stuff. What sectors have you dropped over the years? We have not dropped a single sector. We've been trading the same sector. We've used different proxies. We used to use a different proxy for gold. We used to use a different proxy for oil, but we've traded the same sector since the very beginning. All right. I think that's about it. We'll go ahead and wrap up. If anybody has any further questions, go ahead and type them in the questions box, and we'll cover them. This went faster. I talked faster than I thought I would tonight. I cut out a lot of stuff out of the presentation just to make it streamlined. But I hope you guys learned a lot about exactly how you come up with an idea. You know, frankly, for me, I go to old bookstores. I'm always looking at old bookstores for trading ideas, things that I could systematize, modernize, use modern computing power. And in this particular case, I mean, this one idea has, you know, changed my whole life. You know, I've been selling it since 2012. I've been using it since 2006. So it's been a fantastic addition to my trading style. Do I trade other styles? Do I trade other methodologies? Absolutely. Do I always seem to come back to my good old reliable, boring, not changing my computer swing trading? Absolutely as well. All right. Well, I'm done, so we can turn it back over to Steve. And thanks everyone for being on. You've been a wonderful crowd. You have some great questions. Thanks everyone.
Thank you, Kurt. Very good stuff. Everybody, take a look at it. The reason Kurt keeps coming back is because his system or his trading technique is consistent. So if that's something that really, everybody should take a look at his information. I mean, you're not going to go wrong, especially with his guarantee that if you're not going to make money with it, you get your money back, and or he's going to stay with you until you do make money with it. So, Kurt, thank you very much. Everybody have a good evening. We'll see you in the chat rooms.